Hello, ladies and gentlemen. Welcome to today's webinar. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's topic is the first topic of the next Advanced Trading webinar series. Speaking of advanced methods, the state back to basics might get you think that we will have a look at some basic theories. Well, actually, we're going to talk a little bit more on the fact how you should develop a successful trading plan rather than talking about trading systems or strategies. Of course, we will mention that during this series. Today's topic, however, is more of an intro to the main topic, which is developing a trading plan. Today I'll get you familiar with what's going to be for the next month and a half, because we've got around 11 different topics that are connected to the main headline here. Of course, today I will mostly focus on the main mistakes that traders are making during their experience on the market, as well as some of the benefits that you can gain from those mistakes. It's very common, and should we say at some point of the year, when we're looking ahead to what the market may bring us, we might finally see, for example, let's take a look at what is happening right now, especially within the Eurozone. If we take the euro versus the dollar, we're expecting it to hit parity. Now, another good example of a good informed trader should be that while let's say in Japan, while the Abenomics, as well as its wide range known term by the traders, continue to drive the yen lower, what on another hand is expected to happen in the future? Now, those are the questions that pop out all the time, every day, maybe more than once a day in a trader's mind. What we'll say if commodity currencies that are connected to commodities, for example, as an example, we can take the question of what will the drop in oil, for example, mean for the Canadian dollar or other currencies in general. Now, as you can see from our past webinars, especially our last month webinar, we've been talking a lot about fundamentals and in general of guidelines how to make perfect fundamental analysis, as well as what you should be aware of. We saw that every currency or commodity on the market is connected to each other by one way or another. But what I'm going to suggest to you to take a different road. So when I've been preparing these particular series, it took me quite some time, of course, to gather all the information that is necessary for you to have. Is come to attention that every trader can search the web and find someone else's trading plan. Now, as a suggestion, as I mentioned, that I will make is do not use a trading plan that it's not your own, or should I say developed by your own capabilities and understandings of the market, because you are the one who will take those decisions, and eventually, if you are wrong, you will be the person to blame, instead of blaming someone else's trading plan and look for a successful one. Or as well as we've been mentioning in our past advanced series when we spoke about technical analysis and a good trading technical systems. I can give you so many, but if you don't understand how it works, or if you don't adjust it to your liking and to your benefit, it will never do you any good. That is why one of the most important things here, because I will mention about 10 different, should we say, rules where you should make your first steps into, to begin developing your trading plan. It might take you some time, however, because it's not an easy thing. Especially if you are a newbie trader or someone that just comes to the market from, let's say, the stock market, for example, because the currency market is a bit different, especially when on the physical market you're pretty much buying stocks and futures. As an investor, you are speculating both directions when you are trading on an electronic platform. And choosing a good platform, or should I say a brokerage firm that has extremely fast execution, is also one of the most important things. But we'll take it step by step. So the first thing that you have to understand, ladies and gentlemen, is that you are the risk manager first. And second, on a second place comes the trader that you are. Why am I saying that you are firstly the risk manager? Because the only most important thing here is to protect your own investment and to know how to manage your risk. And then to, of course, pick the good trades. Good traders, they play great defense first, as they know that if they manage their risk properly, their trading system's edge will kick in, and of course the profits will follow quite soon. Also, you have to plan your trade and trade your plan. You see, this is why we're making all of this. A good trading plan is a set of different objectives for your trade, figures that you need to find a plan of how to implement all of this with the best risk-reward ratio, and then follow through onto your plan. You will come up ahead of, let's say, 90% of trades who, let's say, fail to do that. Another thing is, you probably heard about the rule, let your profits run and cut your losses short. This particular rule is, how to say, amendable, not only because of the different type of strategy that you are using, but it depends on what kind of trader you are. And this is one of the most things, the first thing that you have to figure out for yourself, what type of trader you are. Either you are a scalper or a day trader or a swing trader or, you know, long-term trader, investor, so on and so forth. While it is absolutely possible to be at a high probability trader who, for example, gets about from 60 up to 80% of their trades correct by taking profits quickly, it's perhaps a bit more simpler to cut your losses, losing trades, for example, a bit more quickly, and let your winning trades run much longer for a bigger profit. This, of course, particular rule does not apply to scalpers, because scalpers usually take their profits in a matter of minutes, up to 10 to 15 minutes. This is pretty much the longest trade I would do if I'm a scalper, and cut my losses, let's say in the 5th minute where I see that the trade is going bad. Even if it reverses, you can't really afford yourself, if you're a scalper, to stay for hours with a losable position simply because you're following a certain trading plan, which means the mentality here is extremely important. Following those rules without exception will kill all mistakes that you're making so far. And on another hand, mistakes that you're making can kill the trading system itself. If, for example, you're a mess of emotions, BS, and errors, of course, as we spoke before in our psychology of trading, you probably noticed that evolutionary response of the human mind is ill-suited to trading and causes us to do the exact opposite of the point that I mentioned earlier. Let your profits run, cut your losses short. If you can cut out trading errors, for example, for a month, let's say, it's quite possible to turn all of that to seem like a losing system into a winning one. So if you cannot erase those errors from a mental standpoint, or for example, you're mistaking somewhere by not guiding yourself correctly through the points of your plan, you can convert a winning trading system, whether it's technical or fundamental, into a losing one. And this can only bring you losses to your accounts. So another very important thing, of course, as well as everything is numbers according to trading, we know that fees and costs that you are paying as to fees per lot or transaction costs, for example, those are also affecting your trading plan. Of course, you have to manage correctly through all of these mentioned above, as well as if you are a trader with us, you already know that we're quite flexible. We can fix pretty much anything, the cost per lot or leverage or anything else, pretty much. It depends on your commitment, and furthermore, to know exactly what you need. And if you don't, we're always here to help you out with that. That is the reason why we're actually making those webinars, to help not only our clients, but those are actually attending here and are not trading with us. It's quite interesting to not to mention that most of the times traders are shying out, for example, from asking questions in order not to bring themselves forth as one that doesn't know what he's doing. But there is no shame into getting back to the basics as well as we do, to find out where our mistakes are, or if you cannot do that on your own, always to seek help from a professional. Now, just a slight deviation here, ladies and gentlemen. I'm getting a little bit of a few messages here from some of our attendees. Actually, it's only one here. Mr. Green, he can't really hear us, but what I can see that throughout all the attendees, he's the only one that is experiencing this problem. And if the rest can hear me loud and clear, please, at least one, just let me know that the microphone is working properly, because my indicators on the system are quite all right. And I've sent in a message to Mr. Green to let him know that probably his computer is somehow messed up, and he of course should take a look at the settings. And yes, thank you. Thank you, Lizette. I can see that you can hear me well. So I will proceed further on. And of course, Mr. Green will try to reconnect one more time, but we can't lose the time to everyone else. But I can see that he's in, so we can proceed as normal. I hope he's not going to experience those problems anymore. But in case he does, this particular session, as well as any other, is recorded, and you can always take a look at it in our YouTube channel. If you can't find it, just send us an email at webinar@gdmfx.com, and we'll send you the direct link so you can review what you've missed. Furthermore, as we've been talking about the fees and the costs that you might experience throughout your trading, everything is amendable. However, there are things that cannot be, of course, fixed by us, as well as if they're not under our jurisdiction, as well as my say. Those are the bank fees that you're usually paying, but as for those that are trading with us, they know that until some certain amount, we can reimburse those deposit or any other type of fees. As long as you keep in touch with us, everything is possible. So the next extremely important rule is to your trading size, which is more important than your entry price. Why am I saying that? I'm saying it because you achieve your goals through your position size on your trade, not on your entry. So it's how much you trade that matters most. So spend your energy getting this right. All right. It's very important here to break this this point furthermore, so I can explain what I mean. Is that your trading size is directly connected to your risk management strategy or system. That is also directly connected to your balance size. How much you can afford to risk on a single position, how much you can afford to risk on a multiple positions. What is the type of person as a trader that you are, a riskier or let's say a more conservative one. That's why the position sizing is more important than your entry price. Why is more important is because the system that you're using, or the ones that we will once more review throughout this 1.5 months of webinars, is because you're getting a confirmation signal for a direction from a technical standpoint, if you wish, that a certain indicator, let's say, points you a direction up, and your correct entry level is at certain price, and you don't enter when the price is lower because you don't know if it's going to confirm. That's why you need the market to trade above a certain level for some time, if you wish, in order for you to get a good confirmation above 70% of certainty that the price will continue to rise. From then on, you will see what is your price objective. You will set your position sizing according to your risk management system, according to your trading balance, and with response to the pip size that you're after. And from then, you will decide whether actually you're going to set your stops, which is an integral part to one good trading plan. Another thing about the chart patterns is one of my next rules here. Also very important. Those particular patterns work better in the context of the bigger picture. Now, one of the big mistakes traders make is that they expect their technical analysis to work in all market types, on all time frames, but no matter the fundamental backdrop. If your patterns are in alignment with the bigger picture, it can help increase your success rate dramatically. Why I'm saying that? Some of you are probably familiar with the fact that fundamentals have much heavier impact than technicals. Why I'm saying that? Just a news announcement of a natural disaster somewhere in the world or let's say rumors of a civil unrest, political turmoil, as we're seeing in Greece at the moment, or let's say a war, for example, in the Middle East. All of these factors benefit oil and gold prices. Why I'm saying that? It's very important because oil will be much more consumed during moments of crisis, in natural disasters, wars, so on and so on. And gold will benefit from the fact that it's seen as a safe haven from investors. Therefore, the price will increase. And in most cases, should I say, in all cases, if we have such an enormous, uh, news announcement, these prices, I'm sorry, they fluctuate with enormous volatility. One of our topics in our series. I will get you familiar to volatility in more details, what it means, why do we need it, and what do we use it for. Furthermore, your positions are more correlated than you actually think. When things go against you, positions that might not seem correlated can end up and all can go against you. It's important that you put a lot of thought into realizing which trades might be correlated, for example, and then manage that particular risk accordingly. Now, what I'm saying correlated means one relates to another. I'm pretty sure most of you know that, but for those, I had to make that particular statement, so I'm on the right track here, and I should be understood. Everyone knows that for some time back in the days when my early years of trading, about 13 or so years ago, the Dow Jones Industrial Average was closely correlated with the gold price. When one was going up, the other one was going down. The same thing goes for crude oil and gold prices. One was going up, the other one was going down. And when you see one of it going up, you of course you automatically sell the other one. But in nowadays, very important fact makes that very little things actually correlate one with another. Of course they do at some point, but when we speak about positions, you have to see what you're actually trading. Like, for example, commodity currencies. As I mentioned, oil is directly connected to the Canadian dollar. Gold is directly connected to the Australian dollar. Why is that? Because all of these countries are major exporters of the metal and the energy. So when you are going long on gold, you can expect long on Aussie. You can go long on oil, you can expect long on Canadian, and vice versa for the US dollar, of course. But those particular correlations, you have to always pay attention when you're managing your risk. So if you are buying, for example, gold, but you see, if you're buying, for example, the Australian dollar, and you see gold price falling down, you will see decline in the Aussie dollar in the future because of the producers in Australia that are actually losing money from the cheaper gold. This will lead to a cheaper local currency. So you have to get out of the market as quickly as you can, and of course manage that risk. Or if you are on a losing side of the trade, just find the proper exit. How to do that, we will speak in our 7th webinar from now, when we will talk about exit rules. Right now, I will focus on the last general, should I say, rule for today. This would be that, okay, let me put it, the Holy Grail. The Holy Grail, or the absolute pot of gold coins, is yourself. It's not your trading system. Please remember that. If you have developed this trading system on your own, you are the Holy Grail, because you know what kind of mistakes this particular system can do, where you should make your amendments, and what to pay attention to. But if you're not the one that you actually developed this strategy, connect to the person that did, ask him what he thinks about it, where are the flaws, where are the benefits, what to pay attention to, and where the system might fail, because there is no 100% certainty, as well as we already know. Otherwise, you will all be millionaires and probably not attend my webinar anyway. So that is the most important fact. If you have a problem with your own system, you are a Holy Grail that should find those mistakes. And if you cannot, please get in touch with us. We will help you do that. And if you're using one of my strategies already published in YouTube with our channel, get back to me if something goes wrong. Also, most of those strategies are amended every 6 months, as well as you probably already know that sometimes systems need to be amended according to the current market conditions, because the fundamentals are shifting. Important fact and figure. So, getting back to basics, how to simplify your trading plan, or to create the best for you if you don't have one already and you're just coming to the market. This is of course also suitable for any type of trader. For those that lost their path, need something as a reminder, they want to get back to the place they were flawless, and to correct those mistakes in the future by taking the right path to success. In these series, ladies and gentlemen, we will talk about the necessity of understanding trading fundamentals as well as technicals. We will illustrate why a trading plan is often better than a complex one. Like a simple trading plan is better than a complex one, and why it actually offers insights into creating a plan that works for you. So basically, I have prepared 11 different series from A to Z, how to create your own trading plan. I will, of course, stress on the structure of this particular trading plan as an integral part. This is our 8th webinar. Before we start speaking about when to avoid the market, of course, we will also have a look at the whole picture, all in one, in 2 separate sessions on a live chart. We will have a look at from the minute you start trading, from let's say a couple of hours before you start trading to a few hours after you finish your trading day. These webinar series, ladies and gentlemen, will of course contain variable question and answering pinpoints here and there, should I put it this way, as small sessions, as well as many traders have multiple questions about any particular topic that we've went through, or they've missed, or they misunderstood. So whatever question you have, feel free to ask anytime you have it. You better put it straight away so I can have it as on my queue, and then every time I have the possibility to answer, I will do so. So in general, the topics will follow. Actually, I've structured this as a summary of 4, but they're actually about 10. Sorry, about 9, because we have the last 2 sessions are part 1 and part 2, because the time will not be at our side. We will have to stretch to a second session, but that's nothing that we haven't done before. So basically the structure will be the pre-market game plan and presentation and preparation to identify which particular system to use at the right moment of time to create your edge on the market, or how to say, to see what exactly would be traded today, how to find, for those that have not found their trading partner yet, or should I say trading broker, what particular benefits our platform is offering to you. One of it is tight range of spreads, and of course light speed trading executions for entries and exits, which is by far extremely important to any trading system and trading plan, and of course to stay in control and focus as should I say, as a military sniper. The bottom line is that the future of the topics, the next time, that will be next Wednesday. We're heading for a little bit of vacation this weekend along with Friday, so we won't be along to take that presentation on Friday as usual. So it will be next Wednesday, and then we'll continue throughout the month until the end of the month, from where I'm going to take a few weeks off. I'm going to head down to the coast to take some time with my family, and of course we'll continue from mid-August to the end of the month of August with the rest of the topics as it follows: developing a trading plan, what will be traded, how to choose, and how to prepare. These are the first steps that you have to consider. The following one would be the volatility. This is an integral part to any kind of trading. Without volatility, we don't have, we can't really execute our trades, because we're not going to focus that much on sideways range rather than a directional trend, which we need volatility for it. Of course, we will have a look at after that about the time frames, some of the important indicators, about different strategies, different trading styles and systems, what, where, and how to choose the right strategy and system for the market conditions. Of course, we will have a look at this, as well as position sizing. As I mentioned sometime during the session, rules of position sizing, also entries, plus the trade filters, which are an integral part to any trader, to create the trading rules. Because when you have a trading plan, you need to know as it follows which trading system to use. According to that, it will come to the position sizing. Then it will have to come to the entries and how those trades will be filtered according to that particular system, and how to create those trading rules. And of course, not at the last place, the exit rules, also the structure of the trading plan itself. One of the most important topics, when to avoid the market, and of course at the end, the bottom line, within 2 sessions, all in one, the 10 golden rules of trading with live chart. This is pretty much how we're going to proceed for today. This will be all of it, as well as I mentioned, this was pretty much the intro of our sessions. I hope you have enjoyed it. If you have any questions, feel free to ask directly to the email address, or go to our webpage through our support department direct line. You can call us, or you can ask for me personally to have a brief conversation with you if you need anything, or with any other account manager at disposal at this time. I'm Joseph Novichkov, Senior Trading Manager with GDM. Thank you very much for joining us. And of course, I'm expecting you next Wednesday for the first steps to developing a trading plan. Thank you very much for joining us. See you next time. Bye-bye.